Hello, Tucson and Southern Arizona. Kevin Kaplan here from Long Realty, and just wanted to give you a brief update on the housing market and trends through September. So let's dig in. So first slide here, this is under contract for Tucson residential, and basically what under contract means is how many listings went under contract and had an accepted purchase offer by month. On this chart, the black dotted line is a 5-year average from 2015 to 2019 pre-pandemic, just to give us a baseline of what's more normal. 2024 is the blue line and the orange line is 2025. So we've been tracking very close through first part of the year to last year's time. We did see an uptick in under contract numbers in September, above last September and a little closer to our normal trend line. Usually we're trending down in September historically, and we're trending up. Part of that may be because we saw some slight movement downward in interest rates in September, and that may have sparked some buyers to feel confident in writing contracts. So that's under contract. When we break the market down by price point in Tucson and look at the activity of under contract activity compared to last year by price point, we see that the lower end of the market up to 500,000 is up slightly at 4%. The middle, what we call middle of the market, 500 to 749. This is similar to what we've seen this year, is trailing. 750 to a million is up 4%. And then the higher end, million plus, we're seeing continued very strong buyer demand, a million to 2 million, up 14% year to date, and 19% higher on 2 million and up. When we look at closed residential sales, same thing, very similar to last year. The orange and blue lines, we're tracking pretty much on flat to last year, and below the 5-year average trend line. Very, very slight uptick in September versus last September, but pretty much flat. When we break closings down by price point, very similar. We see a 4% increase on the lower end, 3% decline in the middle tier, 500 to 750, 3% higher, 750 to a million, and then 13 and then 24% on a million to 2 million, 2 million up. Well, that's the demand side. When we look at the supply side on listing inventory, we see where we're at. We did have a slight uptick in listings in September. Some of that we'll get into on new listings can be because we had some more new listings come on, because if rates are a little bit lower, then some homeowners are thinking there'll be more buyers and they'll want to list. So we are tracking above last year a little bit and of the normal trend line, but it's not excessive. When we look at the price point, inventory is up in all price points. The one that's up the most is 500, 750, and which makes sense because that's the price point we are actually seeing year-over-year declines in buyer demand. So there's more listings sitting in those price points. New listings, I mentioned this just a minute ago. New listings actually ticked up a little bit in September, that orange line. We think that's because of the reduction in mortgage rates that we saw in September. You'll see we're actually like spot on in September to where our 5-year average is. And so we're pretty much on track, but still tracking close to last year. Days on market. So this is how long on average does it take a new listing to go under contract. We can see that the last few months, our days on market has been elevated over last year and over the 5-year historical trend line. We're currently sitting at about 58 days, so right around 2 months on average for listings to go under contract. Historically speaking, again, it's a little bit above. Usually we're about 50 days, a 5-year trend, so we're a little bit higher, but not terribly higher. Here's days on market breakdown by price point. Again, where the orange is this September versus the blue of last. We're a little bit higher in most price points. The luxury side is higher, but I wouldn't be overly concerned with that because the number of sales in luxury is lower. And those, I think, are just anomalies in the data. Months of inventory. This is our gauge of what's the health of the market. Is it a buyer's market? It is a seller's market? Is it more normal? That green shaded area from about 4.5 to about 6.5 months of inventory is kind of the normal area where we're balanced between buyer demand and supply of listings. Anything below that, if we're more in seller market territory, and above that, we're in a buyer's market. So I've heard people in the news and say, well, we're for sure in a buyer's market. And that's not what the data shows us. That orange line, we were at, I think, 4.1-ish months of inventory in September. We typically, you can see the trend line. Usually in the late third and fourth quarter, we tend to tick up a little bit in months of inventory. So we're not that far off of last year. We were, this time last year, I think about 3.7. We're a little higher than the historical norm. But we're right on that bubble of starting to, on the lower end of normal market. So again, depending on what neighborhood you're in and what price you're at, because it always can vary specifically where you're at, the conditions, but it's more normal, right? It's more normal. It's not an extreme seller's market. The data does not support that it's a buyer's market overall in Tucson. Home sale prices have tracked in a very, very tight range. They've been very stable. If you look at the last 3 years, green line is 23, blue line is 24, orange line is year-to-date 2025. You can see we're about 350 to 355 is our range. I think we were 351 in September. It was median home sale price. It's pretty much been very, very steady. And the good news is it's stable. So we're not seeing any big increases. We're not seeing any precipitous drops. And that's because the market's a little more balanced. You tend to see more stable pricing in a balanced market. You have to remember too, historically speaking, if you look back decades of data, typically home prices appreciate 2 to 3% a year. That's what's normal. So to see this in this range is very normal, and it's encouraging that it's stable. There's no pending doom going on with the Tucson housing market. So what does this all mean? Again, buyers have a little more choice. There's a little more inventory. That's a good thing. They don't feel pressured into settling for a house that's above their price point or not really what they need from a layout or geography standpoint, and they can find something. They have a little more leverage than the past cycle where we saw this extreme seller's market during the pandemic and coming out of that, where you couldn't find anything and they were just picking any house they could get into. In many cases, they didn't even see the house and were waiving contingencies that were putting themselves at risk. So things are a little more, they can take a breather now and actually negotiate a little bit. And I personally think there's a window of opportunity right now. We have stable pricing. We have mortgage rates that have come down a little bit. So it may impact affordability in some cases to the positive. But I do think in the next year or two, if we all think we're going to see lower mortgage rates, what will probably happen is we'll see buyer demand increase, especially if we get to 6 or below 6. And more buyers are going to mean more demand. We think in the next year or two, a little bit of slowdown in some of the new builds. And we have a lot of homeowners sitting on 3-4% mortgages that may be effectively out of the market, and they're not planning on moving. And that may mean that our supply of inventory is going to be limited. So if you have increasing demand, maybe restrained supply, we might see future price appreciation. So maybe a window of opportunity if you can to get in now. Sellers, there's a little more competition. You have a little less leverage. You don't call the shots anymore. You have to coordinate, work with your agent, and find a balance that works for you and the buyer and come to that middle point. And you have to be very conscious of your pricing. Your marketability of your house and your pricing needs to be competitive. You have a short window of opportunity when you get the most eyeballs in the first 2 weeks of a new listing. So don't overprice and then chase the market down. Be competitive. That's it, folks. If you need any more market trend data, feel free to visit our website, longrealty.com, and or reach out to your agent. They can get that for you. Thanks all.